What's going on, guys? Welcome back to another video. Guys, I've been away for the last couple of days, but as I've been away, there have been some pretty interesting moves that have taken place in the market, and all that's done is it's just opened up some very large opportunities that is very easy to miss. But I want to make sure that you guys who are watching don't miss those opportunities that I am talking about, and that's exactly what this video is going to be about. But first of all, guys, just backtrack. If you actually just do a quick Google search on stock market, you can see what the sentiment is. You can see what the media is trying to push. You could see what people are thinking about the markets, and you could just see it here. You could say we got stock market is flashing warning signs. You've got another one that says billionaire investor issues a stock warning about the market. You've got another one saying financial markets hurt by the IT outage, but the values of the companies have not plummeted. So it's clear that the sentiment out there is bearish. It's clear that the majority of people are expecting the market to continue falling. And as I told you guys before, you can't rely on the media to give you an indication of what is truly going to take place. 99% of the times what you read about the market is just noise, and if you follow what is being pushed out there, whether it's the propaganda, whatever the case may be, you're often going to be wrong. Okay, so that's just to show you guys what's out there, and I'm going to show you guys exactly what's going to happen next in the markets. You can see it's very different from what is being pushed out there by the media right now. There are a couple of reasons why we should be expecting the markets to go higher from next week. Firstly, it's this, okay? This is the percentage of the S&P 500 that is above their 100-day moving average. So just think of it as a momentum indicator. Think of it as the percentage of the market that is in a position of strength. Think of it as how reliable the rally is, right? And I've shown you guys this before. When it was hovering just above 45%, around this level, market was pushing all-time highs. I did tell you that the movement we're seeing is questionable. In the last video, or one of the last videos, I did show you guys that exhaustion that was playing out in the markets, and lo and behold, we did get that pullback that I was talking about. But what we've seen is we've seen a pretty interesting role reversal here, because now we have 60% of the market is above their 100-day moving average. So that is 15% higher than it was when the market was previously at an all-time high. So market was at an all-time high, and the percentage of stocks above their 100-day moving average was lower. Lo and behold, now we're in a different space. Okay, now the market is pushed lower, but there is more of the market in a position of strength, and that's the key thing. So what you're seeing out there in the media, of course, is not going to cover this type of information. This type of information is reserved for you guys who are watching, who want to get a deeper understanding, a true picture of what's going on, and then you can go ahead and make some very lucrative moves out there in the markets based off that. Okay, so while the media is pushing this negative narrative, I've just told you guys exactly what's going on underneath the surface, that the market is actually stronger than it has been for months. Okay, because we have more of the market that is above their 100-day moving average. That being said, there are other reasons why we should see a turn of events anytime from next week, and one is just the structural situation that we've got playing out in the markets right now. So yes, we have seen these 3 negative candle prints over the last couple of trading days. But the question is, does that change the technical picture? Have we done any technical damage? No, we haven't. Okay, because we haven't done any technical damage, this move lower just creates an opportunity for a spike higher, and then you could be positioned to take advantage of that. We know we haven't done any technical damage because we had this range here, and I've done a video about that before. And what we've done is we've just pulled into the top of that range. So we've just pulled into a level of support. As a matter of fact, the market can go lower if it was to go lower. As long as it stays within that range, it's still in a massive position of strength, plus the fact that you've got a increase in the number of stocks that are above their 100-day moving average. So this is looking very good for those who are long, but the rest of the market is bearish, and we know exactly what's going to happen to those. So if we're to look at a couple of names, we just go to Microsoft, for example, one of the best positioned when it comes from a technical point of view. Okay, Microsoft has dropped down, and again, it's, you know, wrapped up in that whole IT outage thing, which is basically a non-event anyway. Dropped right into a position of strength. So those that are long in this name from this point onwards will get rewarded heavily. Another one is Google as well. Structural setup on these two names just looks unbelievable, guys. So again, Google has dropped into what we call area of support. It is just getting prepared to move higher. So while the bears are piling on their positions, the intended move is in the opposite direction. It's going to go higher. And then you've got another catalyst taking place next week, and that is earnings. These tech companies have been performing strong for many quarters, and we shouldn't see any change. That's just going to be a catalyst to create this push higher that I've been talking to you guys about. All right, so we have an abundance of names that are going to play. You're going to see this play out on. Again, one is ARKK, pushed into a very strong technical position where it's at 46. As a matter of fact, let me show you the options chain on this. So currently it's standing around 46.50. Options that are 47, 47.50, 48, around that range for an expiration of July 26th. Those are looking very good for an increase of at least 75%. I'm expecting these to print a 75% profit next week as we see that reversal in the markets take place. And you're going to see those who are long in ARK, those who are long in Google, those who are long in Microsoft are going to get rewarded massively, right? So that 47 strike price on the ARKK, the options chain, price wise, that's around $72. Okay, so these are very low price contracts, and if you have some size in your account, you can get multiple positions of these. As I said, I'm expecting these to print 75% plus in profit next week as we see that shift take place. Okay, the market is just too strong to continue this downtrend. This is just a pullback before an inevitable rise much higher, guys, and that's what we should expect. You can see that's very different from what is being pushed out there in the media, because that's very different from the propaganda, but that's just often how it goes. All of that is just noise. If you understand the true picture of what's going on, and that's what I try to inform you guys about every single week, you make sure you guys are in the right position, okay, to take advantage of the markets. And if you have that information, it's very easy to foresee these things and position yourselves and do very well. Okay, guys, there is a link to the Patreon below. If you guys want to join that, highly recommend you do, because we will be taking positions based on what I've told you guys in this video and a couple others as well. So you want to make sure you're in there so that you are also in the right trades and you are exactly where you need to be. All right, guys, I'll catch you guys on the next one.